All right, so let's get started. Okay, so what we're going to go over today is we're going to go over some day trading patterns to look for. Okay, obviously we're not going to have enough time to go over all of the day trading patterns that are out there to look for. There are just too many to cover in one session. But we're going to go over some of the ones that I like to look for and some of the ones that are kind of more popular and also may have a higher probability for a positive trade, right? So the first thing, this is another session that you guys actually came up with that you wanted to cover. So this is something else that you guys wanted to focus on, and that's why we're doing this particular session. So the first thing that I want to go over is the 9 and the 20 EMA on hot running stocks, because this is something that I focus on quite a bit, and you guys probably know that. And so you guys hear me all the time saying, hey, watch for this, bounce off of the 9 or watch for the bounce off of the 20. And, you guys are probably hearing that quite a bit. And I'm sure you know what it means, but we'll go over, obviously, what it is. So let's take a look at BLNK, the way it traded today. This is today, right? Well, it doesn't matter. We can look at yesterday as well, or Friday as well. Okay, so you can see, let me just tell you guys first off that the blue line is my 9 EMA, okay? The yellow line is my 20 EMA. The dotted purple is my VWAP. Certainly probably looks different on your chart, but that's the way I have it set up on my chart. Those are the colors that I know what they mean, what they are at a quick glance. So when you have a stock that's running what I call running hot, okay, it's got a lot of volume. It's going up, rather quickly. It's moving very well. It's hitting the scanners. Lots of eyes and focus are on that particular stock. Then I call it's running hot, okay? And as you can see with the 9 EMA here, once this volume, always take a look at your corresponding volume down here, right? So as this volume starts to come in, you see how flat it was here, down in this area. But once the volume starts to come in, it starts to run hot, right? And as you can see, it's holding the 9 EMA very well. A lot of times it's not even coming back to the 9 EMA. So this is what we're looking for. So let's say that this volume came in here. We weren't watching this stock, okay? And volume was kind of flat. We didn't know it was going to run. We didn't know anything about it that day. And all of a sudden it starts hitting the scanner. And so you see it hit the scanner, but you didn't see it until right here, okay? So when you pull it up, it already has this big fat green candle that's extended off of the 9 EMA. So you don't want to FOMO in, right? So you want to wait for possibly for a pullback to the 9 EMA. You're making sure that this thing's going to continue to run hot and bounce off the 9 EMA. So that's what you're looking for. So once we come back to the 9 EMA, you can take an entry off of any of these areas here. And then what I'll typically do is once I'm in that stock that's running hot, holding the 9 EMA, is I will look to scale out at certain key areas. And that key area may be when we break the next resistance level, whether that be a resistance level that you have drawn on your chart from the daily chart, or from intraday resistance, or from VWAP, whatever that level may be. That's where you're going to possibly be looking to scale out if you're having difficulty breaking. As you see, once we bounced off of this 9 EMA here, after we didn't see the stock until here, right? We didn't see what was going on until it was here. So we didn't take the entry because we were too far off of the 9 EMA. We didn't want to take an extended entry. So we waited for the bounce, and now we're looking, okay, where's our next possible resistance level? So let's just say that we don't have any resistance levels drawn on the chart here. This is just all basically thin air up here. So our next resistance level that we're going to look for is VWAP, right? So we're looking at VWAP, and we're having trouble breaking VWAP here. So maybe you might, depending on your risk tolerance, you might have decided, well, hey, since we're having trouble breaking VWAP, I'm going to go ahead and scale some profit out here since I took the trade maybe down here somewhere, right, off of that 9 EMA bounce. So maybe you scale some profit out here. Or maybe your risk tolerance, is such that, hey, I'm okay hanging in there to see if we break through VWAP, okay? This might have been a little bit scary here when we did break through this 9 EMA, but we did hold the 20. We'll go over that here in just a minute on what I like to do. So when we did break the 9 EMA, at that point, maybe instead of scaling out, maybe you scale more in to your position, because now you're through another resistance level. Okay, maybe you wait for confirmation close of candle here, and you scale some more shares in on this next candle. One second, let me turn off my scanners. Sorry about that. Okay, so, and then you just ride it on up. And what I like to do here is let's say while we're riding on it, let's say that I held my position. I didn't scale out any because we weren't breaking the 9 EMA, because I liked the volume down here, right? The volume is letting me know, hey, we're going to end up breaking VWAP. We're going to break through VWAP because we really like the volume. So I held my position. And then once we broke through VWAP, maybe I added some more to my position, right? And I'm still just fine. A lot of people will say, well, hey, once I get to this next level, this $41 level or a $42 level, fill in the blank, whatever it may be, that you want to scale out some profits. There's nothing wrong with that if you want to do that. What I typically do is I'll hold it until we start having trouble holding the 9 EMA. And you see we didn't have any trouble with the 9 EMA until right here, right? So maybe here I might scale out some profits. Yeah, I did miss out on some profits up here. Maybe I would have taken profit at the $42 level. I don't know. Just depends on how the trade was going. But if I didn't, I certainly would have scaled out some profits once we actually started breaking down below that 9 EMA. And more times than not, once we break through the 20 EMA, I'm all the way out of my position. But let me turn on my handy dandy tool here real quick so I can draw. Give me a moment here. Okay. So, if we didn't scale out any profits here, that's okay, because keep in mind, if you do scale out here, well, there's nothing wrong with it if you want to do that, but if it were to continue on up, maybe you might have missed out on a little extra profit there. But if you didn't scale out there, I certainly would have looked at starting to scale out here, because once you start breaking below that 9 EMA, you held it the entire time here, right? Once you start breaking below that 9 EMA, well, now you're showing a little bit more weakness than you had in this initial move, right? And so that's when you might want to start scaling out some profits, here and or here when you broke the 9 EMA. And then typically, I'll be looking for a 20 EMA bounce from that point. So if we don't have a 20 EMA bounce, like we didn't really have here, right? This didn't come down here and bounce off of the 20. A lot of times when these stocks are running hot, once they're not holding the 9 anymore, oftentimes they'll come down and they'll bounce off of the 20. It didn't happen in this particular case, but it does in other cases. So once we have a confirmation break, or if it starts breaking well below the 20, then I know the confirmation is going to happen more than likely, then I'll go ahead and exit the position there. This is a lot of times where you'll see where people will say, man, I got out of this stock too early. Well, I'll see that a lot of times in the channel where people will say, well, hey, I entered at, let's say, this VWAP area for whatever reason, $40.80, and I wrote it to $42, right? Wherever that was up here. I wrote it to $41 or $41.50, whatever that was. But if you're still holding the 9 EMA, then you still have potential upside, right? So maybe in that case, maybe you stay in the trade a little bit longer. Okay, so that's what I'm looking for when I'm trading a hot running stock that's holding the 9 EMA very well. Okay, I'm looking for that first break of the 9, and then I'm looking at what happens at the 20. Okay, and typically when it breaks below the 20, that's when I'm usually all out. Sometimes, depending on the trade, depending on how the trade's working, what I feel about the stock at the time, I will sometimes leave a lottery play even if we break below the 20. Because especially if you're running, if the stock's been running hot, and let's say VWAP wasn't down here. Let's say VWAP was right here, okay? Because what can happen is you can come back down here, bounce off of VWAP, and come right back up and, have more upside. And that's where those lottery plays can come in handy. Because a lot of people feel like, well, if I got out too early, I could have, had more profit. But if you leave a lottery play, it makes you feel a little bit better about it, right? At least you have something left in there. Okay, so that's the 9 and 20 EMA that I'm looking for. Hopefully that makes sense to everybody, and if not, we can have some questions once we're done with the main session here. We can go over that in a little more detail. Okay, so let's talk about some candlestick patterns, all right? So first I want to make sure that everybody understands a candle, the basics of a candle, okay? So what does this mean? Let's take this candle right here. Let's take this red candle right here, okay? And let's dissect this candle, and let's see what it means. So what does this top wick mean, right? What does this bottom wick mean here? And what does this body mean, right? So what this means is basically when you're looking at a red candle, then the top of the body, which is going to be, let me delete these here real quick. The top of the body, which is going to be right there, okay? That's where the candle opened. That's where the price started, okay? So we ended the price on this green candle here, okay? And the red candle opened there, all right? And what happened with this top wick is that during that 1 minute, this is a 1 minute chart, so it's a 1 minute candle, during that 60-second time frame, the wicks let you know what the lowest point and the highest point there and there of that 1 minute time frame was. So it reached a max of that level and it reached a low of that level on that candle, right? The body just means that that's where it opened and that's where it closed down here, right? And it's exactly the opposite when you're looking at a green candle. So a green candle, it opened down here and it closed up here where the top of that body is, with that being the high of the candle, and if there was a little bit of a wick here, that would be the low of the candle. So just wanted to get those basics out of the way just to make sure that you guys are familiar with the basics of how these candles work. Okay, so let's talk about a couple of different patterns, and I'm going to do my best to find each one of these patterns in a chart. Here's the first one right here. I got kind of lucky and found one right off the bat. So this is a bullish hammer right there, okay? And so what is a hammer candle, right? What does that mean? This candle we're talking about right here, this red bullish hammer candle. So what that means is that the wick, okay, the bottom wick of that particular candle is at least 2 times as long as the body of the candle. So the wick is 2 times as long or more than the body of the candle, which we certainly have here, right? And then what we also want to look for to confirm that it's a bullish hammer candle is we also want to confirm that it doesn't have much of a top wick, right? So as you can see here, the wick on that thing, let me blow this up a little bit so you guys can see it better. 1 second here. All right, so this candle here that we're looking at. So you guys can see the wick on that candle, the top wick, there's not much there, okay? But there's a lot more, at least twice the length of a bottom wick than we have in the body of the candle. The body is right here, right? So we have twice the amount or more. So that would be what we consider a bullish hammer candle. Doesn't matter if it's green or if it's red. Makes no difference whatsoever. You're just looking for that particular look of a candle. And look what happened after that bullish hammer candle. Boom, right? Doesn't always happen, right? You know, there's never and never and never and always in trading, but you know, this is what we're looking for. This is what we're anticipating, what we can expect, right? So that is an example of a bullish hammer candle. Okay. Let's talk about a bullish engulfing candle. Let me see if I can find one on the chart here. Let me look for a minute. If I can't find one, I'll draw you one. No big deal. But maybe I can find one here. Okay, here's one right here. All right. So this right here is what we call a bullish engulfing candle. All right. And obviously it was a little bit of fake out here because we didn't go up after that, right? But anyway, this is what it looks like. So what we're looking for on a bullish engulfing candle is we're looking for a green candle that engulfs the entire, including the wick even, the entire body and wicks of the previous candle. Okay, so you can see that's where the previous candle was, here and there, and this next candle, the entire body of the candle engulfed the previous candle. So that is what we call a bullish engulfing candle. But as I said, these don't always work. And as you can see, it did have downside after that candle, but that is a bullish engulfing candle. Okay, so let's talk about next. I'm trying to rush through these a little bit so that we can see as many as we can. These bullish engulfing candles are pretty good to look for. I like them really well, and you can also look for them on the daily chart, or any chart, time frame chart that you want to take a look at. Bullish engulfing candles are really nice to look for. Okay, so let's talk next about a bull flag. Let me see if I can find a bull flag on here. A good example. If not, I will draw one. I don't want to spend too much time looking for it. Okay, well, we can delete this next one, and I'll show you guys here. So let's just say that this candle didn't happen here. Okay, this one's we're going to just mark it out there. So we have our flagpole here, right? And then here we have a flag, right? So what we're looking for on a bull flag is we're looking for that flag to be a rectangle, all right? This is an obvious rectangle here, right? So this would be considered, if this candle wasn't here, be considered a bull flag setup here, right? I guess this would be one as well. So we have one here, and then we have this going here and this going here. This is another example, sorry about my drawing, but that's another example of a bull flag. This will be a whole nother one here, right? Right there, bull flag. And keep in mind, you know, these are just basically, when you're looking at a bull flag pattern, or even a pennant pattern, which I'll show you in just a moment, they're just basically, you're looking for that trend line break. So if we're looking at this particular flag here, right? We're looking for that trend line break. This is going to be our trend line. So you don't even really have to be looking for necessarily this flag pole. You can be looking for just a short-term trend line break, right? So when we broke this trend line, same difference here. What we do like about the flag pole, though, is that we had a nice upward movement, right? A nice big candle upward movement. And then here's our flag here. And then we, of course, saw some more upside here. And then there's even another flag here, right? Another flag there. So anyway, that's what we're looking for on bull flags. Very easy to identify, very popular, people that trade them. And keep in mind, with all of these patterns that we're looking at, there's no algorithm that, you know, whenever a particular pattern happens on a stock, that something is triggered, that it's just going to go up. That's not the case at all. What it is that other traders are looking at that particular stock and chart, and they're looking for those same patterns. So when they see those patterns, a lot of them are taking the trade based off of those patterns. So when they're doing that, that is it's basically like a self-fulfilling prophecy. Oh, hey, look, there's a cup and handle, or hey, look, there's a bull flag, or hey, there's an ascending triangle. So yeah, this looks good. We need to hop into this trade as long as we get volume, right? So we're basically self-fulfilling our prophecy of looking at these patterns, but there's nothing set into any algorithm that's going to just guarantee that the stock is going to move up just because it has a pattern, okay? And so with that said, keeping in mind that the more difficult the pattern is to see, the less likely that you're going to see upside off of that pattern. So you want to make sure that the patterns that you're looking for are obvious to see. Okay, make sure that they're obvious. Doesn't mean that if you have one that's not obvious, that if it is hard to spot, it doesn't mean that it's not going to go up. It certainly could, but the more obvious they are, the better, because the more obvious they are, the more traders are going to see them, and the more traders are going to trade that particular setup. I hope that makes sense. Okay, let's go to the next one. Let's talk about an ascending triangle. This is one of my favorite patterns to trade, and we actually had an example today. I think I called it out in the channel. It didn't really work out because we had a resistance level up there. Let me zoom out of here real quick. See if I can find that pattern I drew earlier. Here it is right here. Okay, so all I did, I'm going to delete this and redraw it so you guys can see it. And I'm going to move it over before any of this happened. All right, so let me get to my handy dandy, I'm on trend lines, okay. So let's draw a trend line, okay, from here to here, right? And then let's draw one from here to, let's say, there, okay? And let's get this straight. All right. Okay, so we just drew a couple trend lines, right? We have a trend line, we have a support trend line down here, right? And then we have a resistance trend line here. This is where we're meeting resistance. We're meeting resistance with it here. We're meeting resistance with it there. We're meeting resistance with it here, maybe even a little bit here, right? So we're seeing all that resistance there, right? So we have a trend line here and a trend line there. Well, guess what that gives us? That gives us an ascending triangle. And what is an ascending triangle? Well, what it is that where the top part, your top trend line, your resistance trend line is going to be flat, right? It's going to be horizontal, okay? And your support trend line is going to be ascending, all right? So this is what you're looking for. This entire thing here is an ascending triangle, okay? Sorry about my drawing there, but from here, all this whole triangle that you see is all an ascending triangle. Okay, and that's why I called out in the channel earlier that when this broke, I think it's when it broke, I can't remember, I think it's when it broke here, I called it out and I said, hey, keep an eye on NEGG because it just broke through the ascending triangle. It broke through the trend line resistance of the ascending triangle, right? So even if you didn't draw that ascending triangle, what do we know, right? Well, we know we're making higher lows, right? We're definitely making higher lows, okay? All through here, we're making higher lows. Very, very, very bullish, right? So while we're making higher lows, we keep meeting resistance at this same level. So any other chart that you're looking at, whether it be a daily chart or 4-hour chart, 1-minute chart, it doesn't matter. You know that if you're making higher lows, once you break through that trend line resistance, you have potential of more upside, right? Which is exactly what we were looking for here. The unfortunate thing for this particular setup, and this is what I called out in the channel, as I said, hey, we broke through this ascending triangle trend line resistance up here, but just above that, we have this 1968 resistance level, which I got on my chart from the daily, okay? So we had resistance there, and that's exactly where it pulled back initially. And when it pulled back there initially, it broke down pretty good back below our trend line resistance, came back down right around the 9 EMA and bounced off of the 9 EMA, back up to this resistance level, broke through the trend resistance again, right? But came back again and could not hold this resistance level. And because it got rejected a handful of times, it seems that traders, bulls, just kind of gave up, right? And that's why we saw this huge down move and we never saw it come back up there again. And keep in mind, once we break through a pretty good confirmation of breaking through right here of that trend line support, then guess what? This triangle is no longer valid, right? We basically have to delete these and start over with a whole nother trend line, right? We need to see, what we're doing now, because now this move basically is over, right? Anyway, this is why I wanted to point this out to you guys, because we had a good example of an ascending triangle today with this NEGG, and I called it out in the channel, and it just ended up, if you took the trade right when it broke the trend line resistance, yeah, you had a small scalp there. The unfortunate thing here is that we had this resistance level, which was a key resistance level right there on the chart. If we didn't have that, then maybe we would have seen 20 bucks. We might have seen some organic resistance at that $20 level. But anyway, that's what we're looking for on ascending triangle, okay? So you have a descending triangle, which is exactly the opposite, okay? So instead of having a flat, let me draw a trend line here. Instead of having a flat, let me this and do with my drawing instead. So with an ascending triangle, we have a flat top and we have an ascending bottom, right? So our trend line support is ascending and our trend line of resistance is flat. The exact opposite is true for a descending triangle. So you're going to have a flat bottom and your top is going to be descending, okay? And that is not a bullish pattern, that's a bearish pattern. So you're trading like this basically, you know? And then the expected move is to the downside once it breaks through. You know, the expected move is not here. The expected move is here to go down. So this is a bearish pattern. The exact opposite of an ascending triangle is a descending triangle, which is a bearish pattern. Just wanted to point that out to you guys. Okay, so that's ascending triangle. And the next that I want to talk about is a symmetrical triangle. So what we're looking for on a symmetrical triangle, and I'll give you an example. It's one that I pointed out, I don't know, maybe it's been 10 days ago, 2 weeks ago, on a swing trade idea that I'll show you guys on the chart, on the daily chart here in just a minute. But what a symmetrical triangle is instead of your top being flat or your bottom being flat, they're both going to be symmetrical. So they're going to look like this. It's going to look like basically like this. Okay, so that's a symmetrical triangle. So neither your trend line support or your trend line resistance, neither are flat. They're both going to be either your support's going to be ascending and your resistance is going to be descending. Okay, and I'll show you guys a real example of that. Let me get to, I think it was TELL, I believe. Let me double check real quick. Let me switch to the daily chart here. Yes, okay. So this was an example that I gave you guys. I think it was before, I don't remember when it was, but I think it was right around here when I started alerting you guys to, hey, keep an eye on this TELL, and I put that in the swing trade channel because we have a symmetrical triangle and it's going to continue to pinch, right? So y'all see what I mean by pinching. It's pinching here. See, it's getting tighter and tighter and tighter, so it's pinching. Well, the difference with a symmetrical triangle is you can go to the upside or to the downside, right? A lot of times with a symmetrical triangle, it will follow the general trend, okay? So if you look at this entire trend, this entire pattern right here, what were we doing before we drew our trend lines here? Well, we were going up, right? So our trend at that point was up, okay? So what we're looking for is likely a move to the upside, okay? Once we break through that trend line of resistance. We're not expecting a trend to the downside. It could happen with a symmetrical triangle. It could always happen, okay? Either way. But in this particular scenario, it did break to the upside. And we saw, once it did break, which it broke right in this area, right? Once it broke in that area, we saw a really nice uptrend. Let me zoom into this here real quick. So we broke it right here. This was our confirmation candle on the daily chart. So your entry could have been intraday here, or you could have waited for 100% confirmation candle and you could have entered somewhere on this candle. But look at the upside that we had. Really nice upside. Okay, so that was a swing trade idea that I posted in the channel to look for as this continued to pinch. And I even told you guys, hey, this could go long or it could go short. And this ended up being a long example, obviously. So that is an example of a symmetrical triangle. That's another pattern that you want to look for. And this was done on the daily chart. Okay, let's see what else we have to cover here. So we talked about, I showed you guys a descending, so you guys can keep an eye on that for a bearish pattern. And there's a lot more. Like I said, we're not going to be able to go over them all because we simply wouldn't have enough time. It would be like 3 or 4 hour session, which nobody wants to deal with that. But there's wedges, there's shooting stars and dojis and inside bars, and there's all kinds of different setups that we can look at. And the best thing that you guys can do is in the interim, until we get those covered, as you guys would like to do that, you can just go and you can just Google bullish patterns or bullish candle patterns or bullish setups, and you can just kind of familiarize yourself with what you're trying to look for. Just don't put too much stock in it, because you don't want to necessarily try and trade every single one of them. Maybe you want to try and find a handful of patterns that you like to look for, like that's what I do, and you kind of become a little bit of an expert, right, in those particular handful of patterns, and that's what you look for. And you've back tested it, and you've seen that, hey, whenever I see these patterns and I see confirmation volume with it, corresponding volume, then I see a high percentage success with these particular pattern trades that I'm doing. So that's what you want to do, versus trying to learn every single one of them. You can learn all of them. There's nothing wrong with that for all the overachievers out there. But just keep in mind that that's going to take some time. But you can do some of that on your own until we can, tackle those sometime in the near future. Okay, some other patterns that I want to go over with you guys that I like to look for. Let me see if I can get back on that other chart where I have some more drawing room. Okay. If I can find some drawing room here, maybe right here. Okay, so we want to look for, and these are pretty obvious, right? You guys know what a double bottom is and what a double top is, right? So, a double bottom. Now, are you looking for a double bottom where it comes down, and let's say that you're trading like this, and it comes down here, and then bounces here, and then right back down again? I mean, you can, right? But really what I like to look for is a double bottom that looks something like this, right? It looks like a W. So you come down here, and you bounce back up, and then you come back down again over here and bounce back up, okay? Maybe where there's some more trading going on, some more action in those candles. Maybe it was doing this here, a little bit, and then you come back down and bounce here. Okay, a lot of people are looking for double bottoms where they just, it comes down here, and then the very next candle it hits that same area again and bounces back up. That can work out as well, but I'm typically looking for more of this, right? More of that W. Okay, that nice W pattern. Same thing with a double top. A double bottom is a bullish pattern, right? So you've tested that resistance area now twice. We all know that the market likes to do things in pairs, right? So when you come down and you test that support once, all right, and then you pop back up and you come back down and test it again, market likes to do things in pairs, then maybe we go back up and have another nice bounce off of that double bottom. Same thing with a double top. Instead of a W, you're looking for an M, right? So you see this here, you got a top there, comes back down, you got another top, and then boom. So that's a bearish pattern when you have a double top. And you'll see that a lot of times at a resistance level. I could probably find one here if I searched for it for a minute. Let me see if I can find one. Anyway, not going to spend too much time looking for that. But anyway, very simple to find double tops. You're just looking for it testing that resistance area twice. Okay, so that's double top, double bottom. Very, very simple things to look for. Okay, let's go over real quick a cup and handle. That's another one that I like to look for. I'm not going to try and find a cup and handle because they're a little bit more difficult to find, but I'm just going to draw one for you. So let's say this is our resistance level here at 44.50, right? So let's say that we met resistance. We came up here, we were trading like this, and we came up here and we hit this resistance level, and we came back down, and we made a nice little U, okay? And then we hit that resistance level again, and now we start hitting that resistance level, right? And we're just basically bouncing. Well, that's your cup and handle. So here's your cup, right? And here's your handle on your cup, just like like your cup of tea or cup of coffee, right? But pretty much all you're looking for, it's very simple. If you break it down, you're just looking to break this resistance level. That's all you're looking to do. This is a resistance level. You keep meeting resistance here, right? That's all you're looking to do. So it really doesn't matter so much that you have a cup down here, because you could be doing this the entire time, trying to break that resistance level. You can't break it. And then once you do break it, boom, it goes up, right? But anyway, that's your cup and handle pattern. It's going to look like this, right? And that doesn't have to be that way. It can be even down a little bit. It can be up a little bit, whatever. But that's what you're looking for on a cup and handle. Another popular pattern, one that's fairly easy to recognize, That's why a lot of times it has a pretty good trade probability, because it's easily recognizable. A lot of traders see it, and that's what we're looking for. We're looking for to hop into trades where other traders are taking the same trade, right? For that reason, we don't want to take a trade by ourselves. We're not going to move that stock by ourselves, right? So we want other traders to be looking for the same setup, right? So the easier it is to find, the better off you'll be. Okay, and that's what we're looking for on that cup and handle. We're just looking for that resistance breakout. And it doesn't have to be on that resistance level. Maybe it's down here for whatever. Maybe it has some intraday resistance down here, right? And we're just looking to break this resistance level. So as soon as we break that resistance level, that's where we're taking the trade. We don't take the trade here when it's making its handle, because we don't have confirmation yet that we're going to break that resistance level. This is what we're looking for, right? We're looking for that breakout trade. Okay, 1 second here, guys. Getting dark in here. I turn the lights on. Okay, let me make sure that I covered everything that I wanted to cover. We're about 45 minutes in. Make sure I covered everything I'd like to cover, and then we'll open it for questions. Okay. Oh, one other thing that I did want to cover is, okay, so some other patterns that we're looking for as we're looking for breakouts, right? And we're looking for bounces. So, any breakout trade, right? So this could be a breakout that we're looking for here. We know we have a 44.50 resistance, right? We see it here. I have it drawn on the chart for a reason. So we have resistance here, and look what happened once we broke that resistance level, right? So we had, this would be a breakout trade that we're looking for. So that's another pattern that we're looking for when we're day trading. We're on the daily chart here, of course, but we can just pretend that we were on the 1 minute chart. So anyway, we're looking for that. We're looking for breakouts. We're looking for breakouts of VWAP. We're looking for breakouts of, the 9 EMA crossing the 20, or the 20 crossing the 50. Whatever we're looking for, a breakout of a resistance level. Okay, we're also looking for bounces, right? So we know we have a support level down here, right? In this area here. Let me draw a little bit better. So we have some support down in this 44.50 level. So we're also looking for bounces. So, once we break through that level, we come back down here. Hey, are we going to bounce back up? We're going to retest that 44.50 support level and then come back up, right? So we're looking for bounces as well as breakouts. So I think that is all that I wanted to cover for the session. So I'm going to stop the recording and open this up for questions. Let me stop this here.